micro sectors, BNKU could be setting up for a massive upside. Let's go ahead and find out what those probabilities are. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a BNKU technicals, raw price action, and statistical threat of analysis on this Taco Tuesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's go ahead and dive right into the charts. Okay, so I must admit, I do not have a completed version of the backtest here of volatility versus momentum on the daily chart, but I wanted to touch on this immediately because there is a potential for an upside coming in. All right, so I've actually already started the backtest of I can give you the criteria now, right? So let me just go ahead and give you that so you have some context. All right, so anytime that we have expanded into critical volatility here, so which, by the way, volatility represented by this indicator BBWP, and anytime that we have expanded into critical volatility, which is within the 90 percentile, and we paired alongside momentum with an upside pivot, then there have been a few moves to the upside that have been pretty substantial. Okay, so I mean, just to give you kind of a rough idea as to what I'm looking for on the back test is this. Okay, so I do opening to high, so meaning opening of the candle to high to the wick high, right? So if you're curious on the criteria that I personally meet, right? So in this case, we go to the opening of this red candle, since that is when the signal fired, and we take it to the top side of that following candle, which is actually, let's see. Did we validate? Oh yeah, man. Yeah, there we go. Actually, the back test would actually suggest, damn. Right. Yeah, actually, this would be the highest point right here. Okay, so this was a high of about 32.30. Okay, so I just want to show you like how I would run the back test, right? So taking it from the time that we started contracting to the downside, and we had stochastic momentum pivoted to the upside, to the area to where we first start gathering ourselves within the contractive zone. The critical contraction zone could be within the 15 percentile. Okay, so in this case, you can see that the highest point was arguably right about here, because if we put our candles when we started going into the contraction zone right down here, you can see that it's slightly lower than that area. So I want to take the range of the opening from the candle to the highest point of the signal being fired or suggested, right? So that is how I'm running the back test on this, right? So in this case here, here's another situation. So we'll take it from the opening of the candle, and then we so see how the contraction level is limited to this area here. So we have an upside that was a lot shorter. That was let's see, the high of that is about 26.38, and you can see that first of all on the move here. From the critical contraction zone, critical expansive zone, we actually made an upside thrust of about 56.29% over the span of about 42 days. This here was a 12.17% upside thrust over the span of about 7 days. Okay, and as you can see, there are several iterations of which still have to be taken into account, but I'm running a little bit in shortened time. So what I ended up doing is measured the iterations correct versus incorrect. Okay, so that is giving us a total iteration count of 11, 8 out of which have been guessed correctly to the upside. That gives us an average upside accuracy of 77.72%, and the conditions are already set. So we have critical volatility. In fact, we're starting to print these red bars, which represent maxed out volatility within the daily time frame. So these are daily bars since we're on the daily time frame. Okay, so we have that upside pivot from momentum, and we're at critical volatility. Very likely this can actually find an upside fairly soon. So let's go ahead and now touch on the next chart. Okay, so what I want to show you here is actually, first of all, let me just zoom in to the broadening descending wedge, which is already a bullish formation all on its own. Okay, so this is usually a signal for a massive reversal. I'm talking about price action reversal from its current trend. So what we're looking at here, or what we want to find out, is the golden rule of three. How many tests of the resistance have we done thus far, right? So we're looking at test number 1, test number 2, test number 3. Okay, so that usually, test number 3 is usually the test that actually capitulates all the way to its furthest point, which is very interesting since the Silicon Valley Bank actually went under, and this just so happened to be at the test 3 of that resistance. Funny how the charts tend to meet the fundamentals sometimes, right? Very curious here. All right, so yeah, what I'm saying is that we came back down to validate this very important support touch that has been used as a form of resistance. Support here, resistance here, support here, support, support, support. This was a resistance touch over here before reclaiming the inside, so we came right back down at it perfectly. Okay, which could signal a potential upside, and the upside could be fairly powerful. Okay, right now we are at the resistance level from the lows of this candle on October 13th, 2022. Okay, as well as the highs from these candles right over here, which is 2020, June 2020. All right, the high over here as well. Okay, so it is, we're going to have a little bit of a kind of a trek to get to the upside, but definitely this is suggesting an upside coming in soon. So now, furthering the validations for an upside, let's just go ahead and zoom out yet again to where we were initially. Okay, so you're looking at divergence here, and divergence is the opposition of price action versus momentum. Okay, so momentum represented by the RSI indicator in this case. This is the relative strength index. Okay, so what you're looking at here are 1, 2, and 3 drives of hidden bullish divergence. Okay, so that usually happens when price action is making a series of higher lows. So meaning that this was the low here and we have a higher low here, opposed to momentum making a series of lower lows. Okay, so matched to these areas here, you can actually see that we do have 3 drives, 3 primary drives of hidden bullish divergence, and they have already been fired, and it is already validated and starting, right? So let's go ahead and just continue on our validation process by looking at a multi-pane of the RSI in several time frames so that we can see or gain an edge over our trade, right? Starting from the immediate short-term time frame, 30-minute. Okay, so we're looking at a support touch right now at about the 14-day simple moving average. Remember, the 14-day simple moving average is represented by this pink line. Your purple line is the RSI signal itself. Okay, so we're right at support, but remember, 30 minutes lives out pretty fast. It's a micro time frame. Okay, so now looking into the 4-hour, it looks like we still have a little bit of consolidation. It looks like the bears have lost a little bit of that strength and or are starting to cover, since we are technically at a pretty flat bottom, and also momentum versus volatility are still suggesting, are now suggesting an upside. So it would be wise for short sellers to maybe start covering. All right, so as you guys know, I am both short and long biased by training. Okay, so this is I'm speaking from a short seller's perspective as well. I would have already covered here because I keep track of statistics, okay, and probabilities like that. So the 8-hour time frame has too small of a pivot for us to rely on. The 14-day simple moving average is still suggesting a little bit of a downside, but as we jump into the daily time frame, you can actually start to see that this is where maybe the saving grace can be. Okay, so the daily and the bi-daily have those upside pivots. And also the 3-day. So I don't usually like to kind of bet on these tiny little pivots because they tend to fail, right? Just like these over here. Right. So, but the important thing here is particular to the bi-daily. The bi-daily RSI signal is actually right within the gravitational zone of the oversold percentile. Okay, so that usually has a gravitational pull into that bear strength percentile. Okay, so this is showing that there is a potential upside coming in, other than the fact that we are primed for an upside in volatility versus momentum. But now it's actually making me very curious to see other time frames of volatility. Okay, so volatility on the bi-daily is also suggesting that potential curvature right now, critical volatility right up there. Okay, so we want to see oversold critically, and we want to see critical expansive volatility, right? So when we start to get this oval, that's kind of a signal for the for firing that upside, right? Just like it did here. You have that oval here, you have an oval here, right? So that's exactly what it could be presenting. Okay, so now let's look at the 3-day time frame. 3-day time frame is about to reach critical volatility and still suggesting some downside. So that makes me believe that the shorter time frames are the ones that are more primed. 12 hours starting. Let's see. All right, there you go. So 12-hour upside pivot, we're at critical volatility. Let's go down to the 8-hour. 8-hour, we have a corrective pivot, but still upside, right? Critical volatility. Let's go to the 6-hour. 6-hour time frame, upside pivot, critical volatility, very nice. 4-hour upside pivot, critical volatility, now starting to contract, very nice. Okay, bi-hourly is okay. Now this is a shorter time frame. The yellow line is a shorter time frame. It's an EMA 3. Okay, so that is an exponential moving average 3 period. Okay, so that is the faster time frame from the two of them. Okay, this is a 14-day simple moving average. So in other words, this is K percent and D percent. Okay, so D percent is already suggesting an upside, and we are now contracting to the the volatility is now contracting. All right, so very, very good stuff. And critical volatility on the hourly with an upside pivot as well. What I'm trying to say here is that when you have multiple time frames primed with this type of setup of volatility versus momentum, the upside is, it actually would kind of suggest a pretty massive upside. Okay, or a very powerful move to the upside. So we have to keep that into consideration. The signals are, they could be a little premature right now, but they're definitely there. Okay, and the upside could be soon. All right, you guys. So remember, I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. I need you to do your own due diligence, and everything will be just fine. Okay, you guys. But please refer to the links in the description below if you would like to join the ARCa Bulls trading community in Discord, and or coming by and follow me on Twitter and say hi. But yeah, you guys, with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.